This is a simple 3-step plan to master your entries. Let's get started. Your first step will be a liquidity sweep. You want to see some sort of a sweep because this shows institutions accumulating their positions by pairing up their orders with the liquidity they have swept. In this example, price has swept buy-side liquidity consisting of stop losses and buy stops. Your second step, you want to see a market structure shift or break or a change in state of delivery. This should be seen with displacement. If you are unaware of what this is, then we suggest you watch our existing videos on these topics. But this will confirm your reversal is in place. Here, we get a market structure break with displacement following the sweep on buy-side liquidity. And lastly, you want to look for any PD array of your choice to enter off of. Looking at the same example, we have this imbalance that we could short off. Alright, now we will be looking at real chart examples. So if you remember your 3-step entry, let's note it down. 3-step entry. Number 1. You want to see a liquidity sweep. Number 2. You want to see a market structure shift or market structure break, change in state of delivery, and displacement. Number 3. A PD array that you can enter off of. Those are your 3 criteria for your entries model. This is a very basic model, but it opens a lot of possibilities for you to refine it into your own custom model. This you could use as the foundation. So let's get started with your 3-step entry. Starting with my top-down analysis, here we have the daily. Price is showing an aggressive bearish move lower after it swept this buy-side liquidity. That gives you your change in state of delivery, and we could anticipate for price to retrace into a PD array before continuing lower, and this being your overall target. What is price currently trading in right now? This imbalance left behind. Now let's go down to the hourly and see what it's currently doing. It's currently consolidating at this premium array, essentially respecting this premium array. What we get here, price just about sweeps the consolidations high, and then we get a displacement lower. This displacement lower gives you a market structure break. Price comes back, respects this bearish order block, and then has that aggressive move lower again. So premium arrays are being respected and discount arrays are being disrespected. That is your first telltale sign that we are going to continue lower. These equal lows get swept for inducement, and then here, price continues lower. Because on the hourly we are bearish, on the daily we are bearish, we would anticipate for the hourly candle to keep printing bearish candles after it swept this buy-side liquidity. If you remember from the previous videos on liquidity, this is where they accumulate more positions to distribute price lower. And what do you have down here? A trend line liquidity. This is your trend line liquidity, aka low resistance liquidity. There is a large amount of sell stops down here and also stop losses, which all becomes your sell side liquidity. Because we are anticipating for the hourly candle to continue printing bearish and attack these sell side liquidity, we would look to enter off of a premium array. Yeah. This is your imbalance on the hourly. Now, dropping down lower to your execution time frame. What do you see here after price taps into this hourly imbalance? Let me make this blue. This is your hourly imbalance, and this is your daily imbalance. We're focusing on the hourly imbalance. If I bring up the text again, you would want to look for your liquidity sweep and then a market structure shift or market structure break or change in state delivery with displacement, and then you would look for a PD array to enter off of. So with that in mind, going back down into the 5-minute, that is exactly what we had here. We had your first step. This buy-side liquidity gets swept. This short-term high gets swept, so that is your buy-side liquidity. What happens when buy-side liquidity gets swept? Again, price is accumulating more orders after pairing up with this buy-side liquidity that got swept. So we had that liquidity sweep, and here, after it swept to liquidity, we had a strong displacement lower. What does that strong displacement lower give us? A market structure break. If you didn't want to wait for this market structure break, there was also an imbalance here. The price fully closed past with heavy displacement, and that is your change in state of delivery. So this market structure break is essentially extra confirmation. Now we had that market structure break, we will look for a PD array to enter off of. Because price is bearish, we will look for a premium array. So here, we have this balanced price range that we can enter off of, or we can ensure that we get entry off of this imbalance. For this specific trade, I will be using one of those two PD arrays. I will be executing at this imbalance to ensure that I get entered into the trade. My stop loss just above this high, because your stop loss should always be at a level which invalidates your overall idea, not at a level that maximizes your risk to reward ratio, such as this. Because if price takes out this high, it's likely that we are going to disrespect this hourly imbalance and continue higher. Hence why my stop loss is above the invalidation level for my trade idea. So my stop loss is just above there, and then this would be my immediate target. So let's play price out and see what it does. And then it hits our immediate draw on liquidity, being this low here. And that is a very solid trade. Alright, now let's look at the next bearish example following on from our top-down analysis, where we are still bearish on the hourly and we are still bearish on the daily. Here, if you remember from the previous example, we had this trade off of this hourly imbalance. Price then took out this draw on liquidity, and then it retraces and sweeps this buy-side liquidity. So it swept this buy-side liquidity, so this high was simply an inducement. During the retracement, what gets engineered here? More sell-side liquidity. Price failed to take out this low, and instead, it creates a low that is higher than this previous low, which makes that trendline liquidity. So there's even more low resistance liquidity now in the form of sell-side for price to target in the future. So now, with the bearish idea still in play, and we swept this buy-side liquidity to accumulate more orders to distribute it lower, now let's drop down to your execution time frame. Even though we had a sweep here and we had displacement lower, this is Asian session, so I'm not interested. Instead, I will wait until London. Here, remember your 3 steps entry, liquidity sweep, market structure shift, PD array. In London, we had that liquidity sweep. Price has accumulated more orders now to distribute it lower. And now we would wait for a market structure shift, market structure break, or change in state of delivery. Yeah. If this low gets broken, that becomes my market structure break. So let's play price down and see what it does. That low gets broken with displacement. Now, that gives you your market structure break. And that is the second step of the 3 steps entry fulfilled. Now we just need to look for a PD array that price could possibly retrace to and then continue lower. Here, we could use this mitigation block. Your entry could be here, stop loss above here, and then you look to target Asia's low. So it taps us in, and then it has a strong displacement lower, taking out this drawn liquidity, which is your immediate drawn liquidity. From here, you're able to take partials, and then if you wanted to ride price lower, this could be your next target in line with this swing low, and then your overall target being this. So since we had that strong displacement lower again, this is where you could look for a second entry to scale in and continue catching the downtrend. If I move this here, we have another PD array in the form of an imbalance. Same thing. And then it hits your take profit. So that would be another opportunity for you to scale in using the third step of your 3-step entry with the PD arrays. And those 2 trades would be very nice in line with your hourly bearish, daily bearish, and you utilized your 3-step entry, liquidity sweep, market structure shift, PD array. And as you see, price hits the overall drawn liquidity. One next example, again, starting with your top-down analysis, price sweeps liquidity, and then it gives you a market structure break. Now it's respecting discount rates and disrespecting premium rates. That is an indication that the order flow is bullish. Current price action, retraced into this imbalance. And what could be your next drawn liquidity? Here, and also eventually up here. So now the daily is bullish. Let's go down onto the hourly. I'll look for that bullish indication on the hourly. And that is what we had here. Price respects this imbalance, keeps displacing higher. Same thing on the hourly as the daily. It's respecting discount rates, disrespecting premium rates, and it continues to displace higher. Now on the hourly, we are bullish. Here we get another break. Price then retraces into this imbalance during London session. So let me remove this to make it more clear. Price retraces into this imbalance for the London session. If you drop down to the 5-minute now, which is your execution time frame, I will look for my 3-step entry. Right, so remember your 3-step entry. liquidity sweep, a market structure shift or market structure break or change to delivery with displacement, and a PDO rate to enter off of. 5 minute. We tap into this hourly imbalance, playing price out. What do we get? A liquidity sweep in the form of sell-side liquidity, change instead of delivery. And then price also gives you another confirmation by breaking the swing high, giving you your market structure break. Here you will look for a PDO rate to enter off of. In this scenario, I will look at this breaker block. Right, this breaker block, here my long position would be there. And then my stop loss would be below there. What would my targets be? Go into the hourly. This is your next draw. So I will look to target that. And let's go to the 5 minute and see if it tags us in. Like so. And that is that trade done. That is your 3-step entry. Liquidity sweep, change instead of delivery with displacement, and then a PDO rate that you would enter off of. Simple. That concludes this video. Remember, your PDO rates can be any array of your choice. This is dependent on you. However, I would suggest if you are a beginner, then make it as mechanical as possible. Always stick to the same 1 or 2 PDO array to enter off of. These 3 steps are the foundation to your entry process. You can refine it more, but essentially all your entries should be based off of these steps. And that is the end of this video. I hope you guys found this video helpful. If you did, please like and subscribe. If you have any questions or suggestions for future videos, please leave them below in the comments. Like always, take care and I'll see you guys in the next one.